It's Crypto Sniper, your update on Bitcoin and why it got jolted today, and further an update on BNB, that is Binance token as well. Let's jump straight to the charts and get busy with it straight away. I'm the Crypto Sniper and we're talking about Bitcoin. Let's see that chart. Bang, Bitcoin, Tether versus USD. So first of all, without the drawings, you can see that we've had over the last 2 days an inching up that was sold off and then a follow through to the upside today. So that's somewhat positive. Let's just throw on all the magic lines that we've got. Quite busy, as you'll see. So the crazy thing about crypto, and I was saying this inside our community, that initially it was making me, a week ago it was making me nervous. It was just kind of soft and weak while silver and gold was getting strong. It's never a good sign when dollar is relaxing and even having off moments, and Bitcoin and crypto is not moving, particularly if the other anti-fiats were. However, since then, gold and silver have cooled their horses a little bit and calmed back down. Dollar had a little bit of strength until, that's right, until, and before we get into the deep dive on the Bitcoin, let's go straight to the JOLTS report. Job openings. Thank you very much. Job openings that came in, and that came in a little bit unders. So what we've said before to you about data is that data goes in major trends. There was an extended period where they were successfully selling you on how strong the economy was, and we said eventually we suspect at the non-farm payrolls, that was almost a month ago. By the way, live trading day with us this Friday. Non-farm payrolls, that's right. Live trading with us as that number comes in again today. We said we think that trend changes, and it changed 2 NFPs ago, and you got a second NFP last month, roughly 1 month ago. That was unders on the number of jobs, unders on the earnings rate on forecast, and overs on unemployment. All three were bad for the economy. They were the undershoots. We've got the JOLTS job opening data in a data heavy week for the dollar, and overall the trends that I'm seeing in the data, because it's not only price behavior that gets data. We warned you that there's also trends in the data. Sometimes you can have mixed periods, and sometimes you can have periods of surprising strength, which were about 3 months ago, 4 months ago, for a couple of months, and we felt that pivot and change. Now we're getting undershoots. The weakness is truly in. We're hearing about better part of 520 odd billion underwater from the FDIC, the deposit insurance scheme, about the banks being underwater on tons of loans to the tunes of 500 plus billion. So now we're getting a little bit more of the negativity of the downturn, the rates hikes, how they're finally digging in, and of course the increase in inflation that's gone on. And now job openings is a miss to the downside. So that's your jolt in your title that you probably didn't know was relevant to all of this, but it is, and that gave Bitcoin a little bit of a bump. Why? Because the template is that you've been sold is dollar weakness will bring about strength for gold, silver, and Bitcoin. But gold and silver now having a little bit of a mini cycle rest. It's actually Bitcoin that's got the better move out of the events on the US economy weakness. And our expectation is the data to continue to show weakness, and we expect to see some more of that potentially in the non-farm payrolls that you can see with us on our live trading day for a cinch of $197, going through crypto, going through traditional markets and all the markets we love to trade, looking for trades potentially, and discussing setups and how we will be playing it, and watching the number, the most important data number, come in. Don't forget that. Watch out on our Twitter feed and in the links below for the ability to book your slot. By the way, pay for 2, get 3. That's 3 months, and the recording will be retained for you. Anyway, enough of that chitter chatter. This is a continuation pattern. That's first. Let's draw where the continuation pattern is on this daily time frame. That is a capping descending grind line, quite like the metals actually have had as well. You can see the continuation shakes its head a little bit to the downside. The splitter has angled to the downside. You've been rejected once, twice, 3 times, and what do we say? You got it, 4 times a lady. So I expect this to break this capping descending grind line. Then what other structures did we have inside of this? Don't forget, all of this is a long way up. That was your recent high. That was around about March. So it's some time ago. This has been a more protracted for a mid-bull Bitcoin bull, where the main theme has been Bitcoin dominance. Yes, Ton has been a star, Sol has been a star. They were early flyers, but generally it was about Bitcoin dominance, breaking out that major trend box low and going well past the 50s, and we called that. So I would say it's a Bitcoin dominance part. We've yet to have the fullness of any form of an alt run in a meaningful level just yet, and Bitcoin is now looking for that break. But you might see other lines on here, and let's go back and remind you of that. So it's quite possible to have multiple patterns playing out inside a continuation pattern. So across time frame you get multiple patterns. Now we scraped together a kind of sketchy to many people's opinion, but it absolutely works in terms of our theory on the inverted head and shoulder that we called, and that is live. And in fact it actually makes sense as to why we've had such a sustained period of downtime or calm time. So this was the draw we gave you some time ago and said you're going to run through the 80 level. It was there, bang, with that being a left shoulder with interacting with a neckline, a complex head, as often is the case, with a pullback in it up to there. And then we actually pointed out that this is actually a squeezy Japanesey, very weak right shoulder, and it was a weak right shoulder to many. They don't see it counting. It absolutely counts by complex head and shoulder theory, which is exactly what we give you. But what tends to happen if you don't have a deep enough washout for sellers at the neckline, which was 67k, by the way, there it is, there's that number, 67k. If you don't have a deep enough washout after you break, you sometimes still have that built up selling to work out, and those people are desperate to get profit selling, that, you know, maybe bought over here and are holding on, hodling in the red the whole time to get out. The minute they get to their level, they sell. Where do you return to? This is the key element. Our 67k is your descending triangle. And I started mentioning earlier on in the video about how descending triangles in crypto regularly break to the upside, which was something I was discussing with the community in our regular updates that are daily at minimum. And I was saying, guys, this is not normally a technical structure for upside, but in crypto it's kind of an exception. And we were leaning hard on the 67 as a baseline. Of course, at a wick level, you even traded a bit below, but that was pretty much a hard floor. You weren't able to close on any 12-hour session below the 67k level, and the volatility was being washed out. You're getting small candles here, small candles, 2 very small candles there, and then chippity chop, and then a little push up, a little bit of a shooting star reaction, and boom, JOLTS came in, and you were sitting on the 69, another key level that we've identified, and then you pushed up towards that 4th time a lady. Don't forget, that's number 3 on that capping descending grind line. We've shown this exact same theory and the same pattern structure on how gold broke and how silver broke. Particularly silver more recently also had an extended, slightly downward trending but broadening structure that was touched 3 times and broke on the 4th. So it's my expectation you're going to continue to break to the upside. So we continue to say it's a bull market. But of course, if you get a major bank failure, we can have a bedwet moment, much as you got in March 2020, where Bitcoin threw down. But you hadn't really got going on your bull market there. That kind of came before the bull market. This has a risk of occurring midstream on the bull market, or only after the bull market. Maybe it truncates the bull market. I don't know. Because there's a lot of risk on the bonds, the debt markets, the banks, which are the intermediation of debt and fiat for the central banking cartel of criminals. And as a result, you know, major failure there could see people as forced sellers. If they lose the money in their bank, or if they lose their jobs, or any other version of events that sees a very nasty downturn event occur now as a result of the interest rate policy and everybody taking strain, and properties have a major correction to the downside, and realtors get laid off, or whatever, who knows what could happen. There's any ways of Sunday that we could get a kick between the legs and have our testicola vandolas crushed. And who knows which one they'll choose. They're probably sitting with a dartboard right now and going to give us, I don't know, avian flu, who knows, something else. Something's coming. Bank hack. It was North Korea that did it. Yes, indeed. Them with their one little Windows NT PC. They did it. Anyway, so we are generally looking for this to break to the upside. And then that is a 79K run, which will also take out the previous high, and at that point you're probably going to again have a little bit of a pullback. So this has been quite a lengthy and almost lurchy to a degree period of making the new high. You made the new high, but you never really cracked on so much from that new high. Remember, we're at 69 was the high of the 2021 period. And let's just bring in that bigger time frames. Let's go weekly there and just bring it in. I'm going to take all the annotations off. So there you go. That was your event there. That was your new high. And actually, you've had quite an extended period. It was March, the 11th of March, that particular week. So during that week, you actually traded almost 74. That was the highest moment since running the 69s. And then since then, you've largely been contained in quite a lengthy spell of churn and pullback, bid up, etc. And even this candle on this bigger time frame, it doesn't look blindingly brilliant like an absolute ripper, but if it continues to build itself, you will get that 79 run, which will take you up to there, and then you'll probably pull back again. So it's kind of a lurchy phase. There's no real new drivers like there was when we finally left 25k and the ETFs were the big story. That was the best part of your bull market so far, unless you were really bottom fishing off the low vol there. And you took the low volatility and you jumped in. We did call for a turn here when that broke. We said that was the conviction and we were expecting it. We even got in at 19.9s. We were lucky to get there. Just traded below 20. That was our best entry. This foxed us a little bit. The potential had been there, that a possible head and shoulder, but then it went super low vol. That's when bullishness usually transpires. So it undid the head and shoulder risk, and then we had your best two legs, your A, B, C, and C, D up leg. And since then, this has largely been churn. No one is feeling super awesome about the Bitcoin market right now, but no one's feeling bad, especially as it's on the high end of the range now. So just want you to remember that. This has been a sustained period of pull. If you look at previous bull markets, there's something different about each one. They rhyme, but they're never exactly the same. If you have a look at the 20k run, we didn't hang about on this time frame very long. You had a couple of staccato pullback, pullback just before running it. Once we broke it here on this candle, we just continued up. But there was an absolute tailwind of quantitative easing coming in. That's where the 7 trillion came in, and that's what drove you so strongly up. In actual fact, now that the Bitcoin ETF is over, and now it's all about the ETH ETF and what comes of that, it's actually lacking a key new driver. And only a certain amount of institutional money that really wanted to be in is in, and now it's waiting for the rest of the big middle to decide if they want to play with this thing, Bitcoin. So it's positive, but it's not overly so. I would certainly take some profits at the 79 on that inverted head and shoulder we drew, and expect a little bit of a pullback. So again, I'll put those lines back on so you can see it again. But that's where we're expecting you to get up to in terms of that left shoulder, overall head, and very small tucked right shoulder. And we probably are seeing a break of this continuation structure. However, longer term, you take this pole from there to there and you run it up to our high there, I would say, and you clone that on a fairly big time frame, which we should be in log scale. Let's make sure logarithmic and do it again. We clone that and we put it on the log scale. Let's grab the correct one. you're going to have certainly quite an immense upside target for which you could chase into. That's the 108. Don't also forget that we have the far larger orange draw, and this is very sketchy and a bit untidy for the charts, but forgive me, I'm just going to remind you of it. That is this far larger macro reversal that's given the 145 to the upside for Bitcoin, and that's way up here. It's out of the chart site. There you go, 145. So there are bull targets still to be made, a 108, a 79, and 145, and you should expect rests and pullbacks there until such time as we major drivers come in, and you can have pattern fails. So these are guides at the moment. These are guides, and they can of course change. So I'll maybe choose a less busy Bitcoin chart because I've done a lot of annotations on this one. This one's slightly more modern and a little tidier for you. So there are upsides to be had, but remember, those patterns can fail if at any point we get a major demand destroying event, and we'll have to watch that. And usually it happens before you get the quantitative easing you so crave that drives your crypto and Bitcoin up. And it's often a flush out, a liquidity shakeout, and it does quite a bit of damage when it happens. Okay, so that's Bitcoin. Let's carry on and talk about our favorite token that we've been telling you to be biased long, and it is an overperformer. And we will remind you of that. So we did get that certainly right. If you have a look at the 7 days on by market cap, let's just go here and have a look at the majors. You've got BNB giving you 7%, 7.3%, only equaled by Toncoin. And in actual fact, the last 7 days has been very damaging. Ethereum, Solana, Bitcoin largely flat, not quite 1%. Solana down, XRP down, Dogecoin down hard, 5%, 6% for Shiba, and Cardano barely hanging on to top 10 position there. AVAX down 6, Chain 3, 5. You get the gist of it. So actually, the best hold of the majors has been TON and BNB. And BNB, particularly in terms of the downside risk, is probably slightly less volatile than TON. So just matching TON's number for a lot more stable crypto like BNB, which has a 95 billion market cap, which is a fair bit larger than TON, which is where is it, 16. That's quite some difference. You have some real benefit, you have some real liquidity, and you have less likelihood of massive dips or a reduced beta on the downside, yet matching it on the upside. So overall, we're very happy with the Binance call, and at the very minimum 727, and we've also suggested to you that 751 could in fact be part and parcel of that run. We discuss why in our community, and you're welcome to click the first link in the detailed description below to book that call. Book it, have a friendly chat with someone, find out how we run our community, which includes all the course material, a unique bespoke platform, daily updates from myself, regular webinars from the top gun trade leaders, for which there are many on US timeframes, crypto by time frame, also by markets, traditional markets, precious metals, of course, energies, wheats, and all the other aspects for which we are finding trading opportunities. Nonetheless, great move now from Binance. Also the descending triangle DNA that you would have seen there hanging out. And as we say, it's really only crypto that I know that tends to shake these out. A little bit of an interesting thing that your volume by price there was also making a bit of a base there with the real volume. So you were coming and sitting down on the fat end of your volume wedge for this continuation pattern. And if I highlight the 4 or 5 biggest candles there for you, you can see exactly where that's running through the pattern, and that's probably where your base sat. So whilst they were selling, it was selling across the top, driving down, but that floor largely stood. Price value actually would also be interesting to show. Let's get that back on there and show you that in and around the 590, 600 mark The 590 was 600 being the soft floor, 590 being pretty hard, and now you're back up at 667 with a 700 number to come, and I'll actually be holding largely on for the 751, and I'll explain why inside the community if you want to know why. But you can certainly start taking profits at 727 for the upside, where there might again be a rest that could coincide with Bitcoin running 79 at the same time with further upside. Don't forget, however, you have just had a very strong new color. Let's do a very strong move recently here now, and you've run our interim one for this structure, so it's possible to get some degree of pullback. If you wail in at the highs and then come and moan 2 or 3 days later about the fact that you're losing money, I'm going to be asking you, why weren't you buying over here in this low volatility period, which was a squeezy Japanesey? Oh yeah, the shorter time frame squeeze inside our funnel, that was absolutely amazing and gave you an entry and break there. You could have got in even on that squeezy structure right in there. So that's a squeeze within a squeeze. You could have been long from the 577 mark, and you would be $100 to the good plus to this overall move. So in and around 15, 18 going on 20% soon. In terms of all of this. So you had a squeeze within a squeeze that continued to extend. So this has been waited for quite a bit, and it's quite good to see finally. And I look forward to us getting into the 700s, assuming it performs. It still can fail if something major happens, but BNB seems to be one of the firmer ones of the majors compared to ADA, which, don't forget, at one point Binance, ADA and DOT, they were like a threesome just under Ethereum. There was Tether obviously in between, stable coins, but those three were very much close in market cap, and you can see the degree that that has changed. And we've continued to bang the drum of what's not actually a popular coin anymore, because, you know, our friend Funds Are Seifu is gone, and you know, they put some World Economic Forum guy in there. Unfortunately, that's why these things will win, actually, once they become controlled. But you can see now by market cap the difference between Cardano at 16 billion and BNB at 95 billion. That is 70, it's not, it's 80 billion. Jesus, I'm starting to talk like Jacob Zuma with my numbers, yeah? The South Africans will find that funny. 80 billion difference. 80 billion on a 15 billion Cardano market cap. These guys were very much in tandem with each other. And this is the big difference, and the thing I've said about Cardano all this time. This is not its season this time round at the moment. It continues to show very weak relative strength to the other cryptos. It's probably not control structure enough. You know, it's time old Charles winged off to Davos and to Bohemian Grove and to the CFR and with the Wailing Wall in Jerusalem and a couple of other places, and started kissing rings to get his token looked after to the degree that he might like. That tends to be how it is. He's probably doing great work, but we'll see. Not here to upset or trigger the Cardano guys, by the way. You know, he seems like such an earnest chap, but a lot of people will ask about ADA and Cardano, and I'm just saying it keeps slipping. And that's slipping against XRP, which has been as flat as a pancake for a very long time, by the way, as well. So XRP, which is pretty poor and still languishing, nothing major to report yet for the upside, still in middling in there. I think XRP is awaiting the crisis and its unveiling as a major platform for central bank digital tokens, potentially. If it's to do anything, it could still not and fizzle. We'll see about that. It's all speculation. It's the future. None of us know. But we do still have the technical structure, and it is still valid for XRP, but we have insufficient technical structure to give us optimism on ADA, and we have continually good structure setting up on BNB, and that's the difference between 95 billion and 16 billion. And guys, I mean, it's like comparing 100k to 16k. You know, it really is. Imagine you'd put in, you know, 20 or 30 grand, and you got one guy's got 100k and the other guy's got 16. It's a big disappointment out of that. And I'm not just picking on Cardano. There are others that are slipping as well a little bit. Polkadot has slipped even further and is barely hanging on to 10 billion. So if you're a DOT fan, there's that. Tron's already below. So let's crack on with that. Now, hang on a minute. We said Ethereum might do well. And it's been sick as a canary for a while. So here's something just to remind before people say, but you said Ethereum. Yes, we did, and we still do. This is generally going to be setting up that continuation we spoke of. I threw out my ETH when I could see, okay, this is going long story, I'll get it back. And I just doubled up on my BNB because the BNB is in the pattern. This one is a lot earlier in the pattern. That's our low too. So we've only got the whole trend move up, the one down move, the move into a new high, and then that move, and then you're part the way up to making a 3. We need to see that happen, and it can pull back and go up, pull back, go up, pull back. This could be very grindy and lengthy, and it could then give up back ground a long way down again. So there's still quite a spell to play out. So I want to make sure that everybody understands on the Ethereum call that is a future one. While Binance is in a triggered structure that already has a target and is a triggered pattern, this one, we haven't even got the complete pattern yet. So there's a bunch of up, a bunch of down, and a bunch of sideways still that could play out. However, it could also get very quick and jump on its horse, and that's why it's worth keeping an eye on. It could have a really strong one, a minor pullback, and then chip and break, and then really run hard. That's a super optimistic view, but you could easily miss out then on a funnel break up there. But typically from a proportional sense, I'm feeling the orange more than the pink, and especially now it took a big move and now it's just sitting back and hanging and hanging and hanging and sitting back. So Ethereum still slightly laggardy, but its time is coming, and we stand by the original video. But remember, it's not tomorrow, unlike Binance, which is right now in a breakout structure and is performing like a breakout structure in a generally little bit stale crypto vibe, which is not really having the alt moon yet. Bitcoin is only stirring a little bit. It's not super bull, everybody becoming millionaires and lots of everybody doing moon calls and running off to the Lamborghini dealer. It's not that kind of a bull market right now, and it's been quite a lengthy pause. And in fact, a lot of retail, jaded, disbelief, frustration, impatient, all those emotions right now, and that's usually a good sign for bullishness to come. So when you guys are all going, oh, I can't anymore, that's usually peak fatigue, and that's often just before things start to go and people cut their losses, they go somewhere else, and they run away, and then the move starts to come. But Ethereum will be, to our opinion, breaking to the upside. That will take it strongly into the mid-20s, but first it needs to give us that up and over third impulse that I was drawing for you there, and I think it looks more like the orange one than the pink one. It could of course be a smaller version thereof and do something like that and then go, but I can't guess the length of that string in terms of how long the proportionality. We just have to monitor. So especially as it stopped, it also stopped over here, its upside. It could have continued up even at a slower rate, and I still feel it's got close to 20% to give us a nice juicy third high. And then how long does it correct for before it settles down? It then could go low vol for a long time. How long can it go low vol, or would it go quickly? It's difficult for us to tell. So it's early doors on that one, but it's not inaccurate. So time frame, the order, the sequencing of events. Ethereum has a big event to come, but not yet. It's kind of a little bit like XRP. Not yet. Not yet. It's not next day, next week, next month. But BNB is now. And that's the one we've continued to emphasize, and we see it being the early runner. Once you get out of that, these other ones might have set up a little better, and there'll be new things to show you. So you keep taking the aggressive runs. This is the key about this crypto game, guys. And I'm going to finish here because I don't want this to be a lengthy video. And I hope you like and appreciate this. And don't forget to book the link if you want more details. Just click that first link in the details. There's also, by the way, way, simple FX for trading off in the links below. And for those of you that want to buy bullion, there's links there too. So we appreciate that support. But going back to this, here's the thing you want to do with crypto. You want to be in the right coins at the right time. And when they rest, you want to be in the other right coins that are now out of sync and now running when your bull coin is resting. That's what you want to do. The worst thing you do is to hold on to your favorite belief alt, which languishes, say an ADA, for example, just as an example, there's others, goes nowhere. You're sitting out most of the bull market. You get frustrated and you leave. You chase something that's just pumped. It pulls back and eats some of your capital, and then the one you were sitting on runs. That feels like losers, a real loser's slap in the face, and you don't want to be doing that. And that's the value technical analysis gives you. It gives you an idea at when what might happen, a guide. And that's why I say BNB before Ethereum, BNB before XRP in terms of these possibilities and timings. And so far so good, and it's continuing to add. And I'm lucky enough to have crypto accounts very much close to their all-time high in an environment where other people that were peaking at 74 and now Bitcoin's 69ish thereabouts are still a little bit under by 5, 10, 15%. Okay, so hope that's of value to you. Book a call in the link below should you wish to join us for that. By the way, also available if you just want to test us out and join us for a live trading day on that very low price point for 2 sessions, an hour and a half each with a break, plus the recording for a month. Or if you take 2, you pay 2 and take 3, you will actually have 3 months of access to those 3 sessions. That link will also be below. Join us this Friday for live trading day, where crypto will in fact be covered in good detail, and you can even ask questions and we take some time and look at your favorite tokens near the end there as well. Okay, thank you very much for watching. We're delighted to have you. Play safe out there. Remember, stops in. If you're speculating with leverage, make it a logical technical place that would mean a sudden change in direction. Try getting early relative to that place so that you keep that distance small, but have a real block of concrete for this reason to which to place your stops behind, so that your reality of surviving and have an expansive reward to that tight risk. High reward to low risk trading is the best way to utilize leverage. Don't overtrade. Leave the charts to do what they're going to do, and make sure you have other activities that generate income for you in the meantime. Okay, keep well, look after yourselves, and we look forward to updating you further on this market and others in due course. Bye for now.